Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Andy Baehr. He's the managing director of CoinDesk Indices. We're going to discuss the most important objective for the projects the crypto industry is involved in. Andy, it's great to see you as always. Welcome back to TradeTalks. And before we get into the projects and last mile that we're in, I want to talk about third quarter for a moment here. Doesn't feel like there's much news. Feels like there's not much has really been happening in the market, and Bitcoin is decoupled from the broader market.
It sure has, Jill. It's great to see you again. Yeah, in the third quarter, Bitcoin declined about 11%. It kind of observed a very tight trading range. Volumes were lower. Volatility was lower. It was what we often described as a listless market. Not very much fun, not a lot of, in fact, the only real news during the summer that made any difference were regulatory related news stories that had a temporary effect and then kind of blended back in. So it's gone from, I would say, listless in the third quarter to almost paralyzed now, and it's all really holding back based on the expectation of a future spot Bitcoin ETF. Anything interesting with Ethereum that you've picked up on? Ethereum's been an interesting story. Now, whereas Bitcoin is still up 65, 66% on the year, which is a really strong performance. A lot of that came in the first quarter. Ether is only up about 30%. There's been, since the Pepe meme coin craze in spring, if you'll remember that, there has been sort of a decreasing volume of activity on the Ethereum network. That's led to lower fees. That's led to lower validator yield. One of the things that we measure with our Caesar Ether staking rate is the rate that validators receive from both performing consensus duties and receiving fees. That's been drifting lower. So along with the volatility and the interest in the volumes in the market, the ETH staking rate's gone lower, and that has actually done two things. First of all, the price of Ether has remained kind of in a range and is a little bit depressed now, around 1575. Our trend indicator indicates a downtrend. And the other thing is that the number of validators who want to become or in queue to become active Ether validators, you used to have to wait 45 days to become a validator. Now you have to only wait a few minutes. Mm-hmm.
Let's talk about some of the projects that you're seeing in this space, because to your point earlier, it feels as if Bitcoin's almost being held hostage by what happens if the ETF is approved, if it's not approved. Yeah. What do we need to remember in terms of what the most important objective is to get this in investor portfolios?
I think it's a great time to remind the industry. When you've been in crypto for a while, you're first of all, you're self-selected, right? You're probably an early adopter. Some of us are ardent futurists. You like financial structure. You like the idea of newness and bringing new things to market. And the 2023 has been kind of a year that's been almost lost to the regulatory delays and to the kind of stagnation and cleaning up last year's messes, right? Mm-hmm. So while a lot of us like to talk about things like DeFi, we like to talk about tokenization of real world assets, we like to talk about crypto sectors, there's still a bunch of people who don't understand and haven't taken the time to think about how Bitcoin can make a bigger improvement in terms of diversification to their overall portfolio. Coinbase recently said that 52 million Americans hold crypto, and that's a pretty impressive number. But if they're holding it or only holding a little bit or holding it sort of as an experiment and it really hasn't entered their thinking about their own financial planning, it still remains kind of on the fringe. So we have to remember that pretty much our primary objective is to pave that last mile and help get the intuition, the education, and the implementation in place.
So in the absence of a Bitcoin spot ETF, are there other types of products that whether it's financial advisors or investors can access to get that Bitcoin exposure?
Yeah, absolutely. And in fact, today we made launch notices of two such things. First of all, for Ether, if you want to have staked Ether and you really want to have that done on a fiduciary basis, you need a manager to do that for you. So today we announced that the Methodic CoinDesk Staked ETH Fund is going to launch today. That's going to be an institutional private fund where the manager is going to organize for Ethereum to be validated with institutional quality, benchmarked against our staking rate and delivered into that kind of channel. So in the absence of ETFs, the institutional channel can look at private funds. There's also a fast growing market of platforms which offer separately managed account services into the advisor channel. And this can be huge, not only because the advisors have really professional platforms to work with, but because it's in this SMA format and they eventually get direct ownership of the tokens via custody accounts, you can really look at a much broader set of investments. One thing that came out today also is that we're working with Global X, the ETF company, to have separately managed accounts for our Bitcoin and Ether trend indicator linked products on the OnRamp platform. OnRamp is one of these that connects with a lot of advisors. It's really a tech platform that organizes everything from the trading to the custody to the reporting and gives the advisor really an on-ramp into crypto.
Should a spot Bitcoin ETF get launched, do you think these products will just go away? I mean, wouldn't it be better to have a number of products that are competitive with each other?
The last thing I worry about is cannibalization, Jill.
Right.
Right? When you think about, we do need ETFs. We need that kind of structure, that kind of ease, that kind of market structure. Options can be built on top of it. They can be mixed in with other equities and create all kinds of different portfolios and baskets. ETFs are vitally important, and the number of quality managers, including BlackRock and Global X, who are, putting forth products into this space, is really going to be transformational. I think that's going to open floodgates up. What we hope is that once that gives the market and the distribution engine and the asset management community reasons to think about the best way to have Bitcoin improve portfolios, people will start looking into their second, their third, their fourth tokens. Ether will certainly be the second, and now that Ether has a much better understood staking yield, the idea of having a total return Ether exposure is kind of interesting too.
Right, and there's such an appetite out there to move away from the 60-40 portfolio and look for different types of alternative asset classes. I mean, that really has been the story over the past couple of years. So when you think about like structured credit, private credit, real estate investments, that's what investors are looking for. I mean, it sounds as if we can get it in this ETF wrapper. There's your alternative asset class right there.
There's an alternative asset class right there, precisely right, that will offer diversification. The correlation of Bitcoin to equity markets has come way off. It's really around 0.5, around 50% right now, which is less than it was sort of a year ago. No, I think a lot of the other asset classes you mentioned, private credit, private equity, those are often, they're excellent if you can get them. They're limited to certain distribution channels. ETFs there's nothing better than an ETF to democratize an idea. After the ETF, I would suggest that advisor-driven, even to retail or high net worth or accredited investors, advisor-driven products that can really, really get in deep and come up with some really innovative portfolios or smart beta strategies are really going to help people out.
Well, I mean, that's a great point too. Liquidity is always going to be a question. It's not that easy to get in and out of alternative types of investments. The ETF wrapper eliminates, the issue of liquidity.
It sure does. And yes, having a liquid, publicly traded, visible and trustworthy, it's all part of the last mile expectation, right? I think people, even people who have owned tokens, who have cold storage sticks at home, they've gone through that whole educational process of understanding what their liquidity profile is like, what their security is like. They've taken it on themselves to do research on their exchange or on their own cold storage situation. I think most people just want to trust the last mile that they've trusted all this time, where all their money is, right? They want to trust their advisor or a fund or their retirement account or some other kind of very, kind of well-regulated and well-understood delivery mechanism.
All right, Andy, appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.